Hello and welcome to Trading Hour. I'm Sonal Bhutra and with me is Surbhi Upadhyay. Surbhi, good morning. Well, we did see some highs in the morning. We've come off those highs, but still, markets are managing to be in the green. A lot of outperformance coming in from the broader markets for sure. Beat chemical names, a lot of them doing really well. So some possibility of a recovery that some of the brokerages are talking about. And fertilizer names, they are just going one way after the expectations from the GST Council. But of course, that is something that we'll get to know only over the weekend.
Absolutely. I think we're wearing, absolutely well-balanced colors, red and green. And right now, the green is winning. And it's a good-looking screen, actually. And why do I say good-looking? Better than yesterday, or even better than this morning, because when we opened out, it was an extremely narrow start with only a handful of bank stocks moving higher. Now, banks anyway are doing okay. The bank Nifty is still outperforming. But other stocks have started moving on the upside of the screen as well. Reliance would be a case in point. It's up about 1.5%. There's ITC, which is now kicked into the green. There's Lever. Some of these consumer names are doing well. There are a couple of metal counters that are quite hot as well. Hindalco, Tata Steel, Coal India. So short point is that it's a more diverse market today, even within large caps. You're seeing more contribution come through, and the mid caps have recovered. The mid cap index is actually looking quite good right now, 0.7% higher on the mid cap index, and a very healthy advanced decline ratio. So yesterday, remember, we had that pause. Mid-cap market was selling off. Buyers are back today, and there's ample green on the screen. Let's get the advanced decline lines going. There we go. That's pretty healthy. Almost 1,700 stocks advancing right now, Sonal.
Oh, yes. So, again, we did see some profit booking. And again, mid-caps are back. They're taking all the attention from the large caps right now. But of course, as Surbhi was pointing out, some of these large caps are also participating. The likes of Reliance and some of these FMCG names as well. But we've been talking about individual names. So let's talk about an exclusive. Anil Agrawal, founder and non-executive chairman of Vedanta, says he's optimistic that demerger will get completed in this fiscal year. Adds that he expects a valuation of $1.2 billion per metric ton for steel assets. Listen in.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also. Steel, we are one of the best prime location of a steel asset, which is in Jharkhand, near Bokaro, is in the Bokaro. We have a proximity of all the raw material, iron ore and the coal. We are proximity of all the railways. We are proximity of all the gas. We have put this asset on the basis that if we get 1.2 billion per million ton, we have a 3.5 million ton of plant, which at the moment we are producing close to 2 million. 3.5 will be by end of this year. Total debt on the Vedanta Resources. Vedanta Limited is the subsidiary of Vedanta Resources. All put it together, the total debt in the company is $12.5 billion, which is not even 1.5 time or 1.2 time of the profit what we made. As far as the total debt on the top is concerned, we have the trophy asset on the top, which is we own the largest copper deposit of the world called Kankola Copper Mine, which is on the top, and we are looking, people are looking forward from us. Would you like to dilute some equity into the KCM? We haven't thought anything so far.
Okay, that was a big interview of the morning. Vedanta co-founder Anil Agrawal saying that no plans of reducing stake in the company and the demerger of creating 6 listed entities is well on track. Well, speaking of big corporate voices, here's another one, and this is coming in from the banking sector. SBI Chairman Dinesh Khara is expecting 14 to 16% credit growth in FY25, with margins being steady at just under 3.5%. He was, of course, in exclusive conversation with us earlier in the morning. He says that excess provisions, which are already there in SBI's balance sheets, will help meet the ECL norms, expected credit loss norms, as and when they kick in?
We are hoping to see the credit growth in the range of about 14 to 16%, and we expect to see very broad-based growth in credit, right from SME, agriculture, retail, and also in the corporate. As far as we are concerned, our domestic NIM last year was 3.43. So I expect our domestic NIM should be around the same number. See, as far as ECL is concerned, first and foremost, I would say that over the period of time, the loan book of the banking system has improved significantly. So if the ECL comes, perhaps whatever competition was done, maybe about a year back, banking system would be much better, and we are certainly much better as compared to where we were last year. So I think from that point of view, we don't expect any kind of an impact on us as far as the ECL is concerned. MFIs are concerned, well, of course, I think the rural went through some challenges at some point of time, but now we are seeing positive trends. But yes, of course, we do hear from MFIs who are having a loan book that there were some challenges. But I think as far as we are concerned, we don't see any kind of a stress.
Okay, that's the word coming in from SBI, but let's stay with financials. Kotak Mahindra Bank and City Union Bank, they are doing well on the back of positive note coming in from brokerage from Macquarie. Macquarie has also downgraded SBI and other NBFCs. Abhishek Kothari is joining us with all the details.
To begin with, Macquarie has written on financials. They have upgraded Kotak Mahindra Bank as well as City Union Bank to, outperformance from neutral rating that they had earlier. They said that these stocks have underperformed in the last 12 to 24 months and valuations are cheap and risk reward is favorable right now. They have downgraded SBI to underperform from neutral after the recent outperformance that the stock has seen, as well as the fact that, there is upcoming ECL provisions or regulations which will kick in. Decline in return ratios, that is ROA and ROEs, as well as possible equity raise. Amongst NBFCs, they have downgraded Bajaj Finance, Chola, as well as MMFSL from neutral to underperformance, given the fact that outlook for loan growth is on the weaker side. They expect fall in ROEs, that is return on equities, and as well as the fact that there is a delayed, cut in interest rate cycle that they expect going ahead. So on insurance, they remain cautious on the overall insurance space. However, they have upgraded SBI Life to outperform from neutral, as they believe that it is less affected by the EDI, regulations that have come in. So they expected to deliver sector-leading VNB margins at 15% plus. Valuations in that context are reasonable in their view. So their recommendation with respect to target price, which has been increased, is for Kotak Mahindra Bank as well as City Union Bank, SBI Life, and Bandhan Bank, while they have cut the target price for SBI, MMFSL, Bajaj Finance and Chola Mandalam as well. The Bajaj Finance target price is a huge cut to 6,600 from 8,100 that they had earlier. Back to you.
Okay, got it. Abhishek, thanks for that. So, yeah, lots of very interesting calls from Macquarie. But there's also a call from Motilal Oswal. Motilal likes DCB Bank, is it?
Well, after 5 years, Motilal Oswal has upgraded the recommendation on DCB Bank. They have upgraded it to buy from neutral, increased the target price to 175 from 155 that they had earlier. They say that business growth has remained steady and valuations are reasonable. So operating leverage will start to drive the ROE recovery for the bank going ahead. They expect 19% CAGR in revenue over FY24 to 26 with stable margins and steady loan growth as well. Talking about loan growth, they expect recovery in loan growth and anticipate improvement in operating leverage as well. So they estimate 21% profit growth on a CAGR basis over the next few years. So they estimate ROA and ROE to reach 1% and 14% by FY26. So current valuation of price to adjusted book value of 0.7 times in their view is reasonable for the stock. Back to you.
Okay, all right. Abhishek, thank you so much for joining us with all those details. DCB Bank, the stock is up 4% in trade today. We'll do one thing. We will slip into a short break now. When we come back, we'll discuss what's buzzing in the commodity space with Manisha Gupta. Stay tuned for that.
Welcome back. Let's put the spotlight on the commodities space. Like we told you, some of the metal stocks in the equity side of the market are also running higher. I think Manisha is looking at copper. So let's find out what's going on over there. Manisha, what's the latest?
Thank you for that, Surbhi. Well, a couple of metals which really seem to be doing well and have stronger fundamentals and perhaps more upside from here on are zinc and copper. Both of them trading off their recent lows, and copper especially is now off its 2-month lows. When you look at the last 1 month in sense of international copper prices, we've done an all-time high of $11,000 a ton. That was in the month of May. For this month, we have seen a low of around $9,500 a ton, currently trading at around $9,800 a ton. So we've seen a very sharp decline from its highs, but some recovery from the lower side as well. Well, there is contradicting fundamentals that we're looking at in sense of copper, but the support clearly seems to be coming in from the point that China has left its interest rates unchanged today. That is on expected lines and is expected to be supportive as well. If you look at the China data itself, that has been quite uneven. On one side, the property sector continues to be on a lower side. New home sales, property prices, investment in sense of property, all of those numbers are on the weaker side. But on the other side, there are some supply situations as well. If you look at Chile's Codelco mine, the supplies there have declined. China's smelter output cut at around 10% also seems to be telling you that the refined copper availability going forward can be a bit of a concern. But then again, if you look at the inventories in China, they are at a 20-year highs. And if you wanted to buy copper today, it's at a discount of $130 a ton as compared to copper 3 months ago. So there are various factors in movement right now, but the markets do believe that a bottom perhaps in case of copper is done. And from here on, you could be looking at some consolidation, even gains.
Okay, consolidation or even gains, and this has been the hot commodity right this year so far. Thank you so much, Manisha, for joining us with all those details. Well, we'll do one thing, we'll get into another break. When we come back, we'll put spotlight on a whole host of stocks that are buzzing around in trade today. Stay tuned for that.
Welcome back. You're with us on Trading Hour. Now let's put the spotlight on a couple of stocks that are in focus, starting with Sun Pharma. Sun Pharma is actually one of the biggest losers on the Nifty today. This after the company's Dadra facility received a warning letter from the US FDA. Ekta is joining in with more details. Ekta, so what is the issue with this Dadra plant?
Well, the Dadra facility has received a warning letter from the US FDA. Now, the street is not that surprised about it simply because they had already received an official action indicated status from the US FDA in April of 2023. This was based on the December 2023 observations which they had received. They had received around 6 observations at that point in time in terms of an inspection, and the observations themselves were telling enough for the street to assume that, you know, this particular plant is probably going to face some amount of regulatory hurdles. So that escalated to an OAI in April of 2024 and now has been issued a warning letter. Now, the good thing is that with the warning letter, the production of the current, the current drugs does not stop in the facility, but the new approvals stop till the remediation is complete. With an import alert, the production completely stops. Now, the street is assuming that it's probably not going to escalate to an import alert simply because generally the trend has been that you receive an import alert directly without a warning letter, and it's been around a couple of months since the OAI, and if in case they were to receive an import alert, they would probably have already received it. Now, the plant itself is important because the API for Revlimid generic is manufactured from here, but the overall contribution is expected to be mid to single digits or mid to high single digits, not too much in terms of a total contribution to the US sales. But one will have to see whether or not this escalates. On a larger scale, for Sun Pharma, remember that the Halol facility is also under import alert at this point, has regulatory issues. It's under an import alert since 2022. And the Mohali facility, which was under the consent decree, which is a plant that they received from Ranbaxy when the acquisition took place, did also receive a non-compliance letter from the US FDA recently. And hence, both those plants are under the regulatory scanner, and Dadra now joins the list.
Okay, all right. So Sun Pharma in focus. The stock though is down around 2% odd. Thank you so much, Ekta, for getting us all those details. While some more stocks in focus, Minda and CE Info Systems, they are gaining after brokerage firm Goldman Sachs has initiated coverage on both the stocks with a buy rating. They've also initiated a coverage on Tata Technologies, but with a sell rating. Sonia is joining us with all these details. Sonia.
Well, thanks a lot for that. As you rightly pointed out, Goldman Sachs put out a very interesting note where they have two buy calls, one coming in on Uno Minda. Now, Uno Minda has been one of the strongest, companies and stocks in the auto ancillary space, and Goldman Sachs has initiated a buy. They have a target price of 13.50. They talk about how the company is really well positioned for growth in India's auto component industry. They also say that the company is benefiting big time from the shift in premiumization of SUVs and, premium motorcycles, EV scooters, etc. So, Uno Minda is a big beneficiary of that. Currently, Uno Minda has 50% market share in the auto switches segment and 40% in four-wheeler alloy wheels. They also like CE Info Systems. They talk about how they've initiated a buy with the target price of 2,800. The company is well positioned to benefit from its leadership position in the automotive navigation, mapping devices and connected vehicle space. But the stock that they are bearish on is Tata Technologies. They've initiated a sell call on that with a target price of 900. They say the stock is trading at very uncomfortable valuations of 50 times forward PE, and the fact that, the large concentration of revenues comes from Tata Motors and JLR. So they haven't really broadened their portfolio a lot, and that seems to be a big negative. Going forward as well, they say that it may become harder for them to broaden their customer base in future. Back to you.
Okay, all right. Thank you so much, Sonia. So, Tata Technology is lower by 1.5%. At the same time, Goldman Sachs has been very positive on Persistent Systems, both of them catering to the EV space. But thank you so much, Sonia, for joining us. Well, the other stock that is on our radar is Office Space Solutions. The company listed just a while back. It's been around 20 days. And this is the first earnings that they've reported after listing. It was a good set. And the revenues, they went up by 44%. The EBITDA was up 35%. The profits came in at 1.3 crore rupees versus a loss of 13.7 crore rupees, and this is the first quarterly profit that the company has made in a long time. So that is something that the street likes for sure. In terms of the segmental breakup, their co-working spaces and allied services, that is done well. The revenues have gone up by 27% there. The construction and fit-out projects, which is around 23% of their overall revenues, that has done really well, up 150% on a YOY basis. Losses, they have been continuously reducing in last couple of financial years, 17.8 crores this year, which compares with around 42 to 57 crores that the company has been making all this while. So good, looking good in terms of numbers. The outlook is positive according to management as well, and they do indicate that the occupancy in FY24 was at 71% and the break even at these levels as well.
Okay, really Office Space Solutions is absolutely bursting through today. Very, very excited on those numbers that came in the quarterly update. Let's take a quick break. We'll come back on the other side and talk about market technicals. We'll have Apurva Sheth from Samco Securities joining in with a couple of trading ideas.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, one stock that we've been talking about last couple of weeks has definitely been Nvidia. It has ascended to the position of the world's most valuable company, unseating long-time tech titan Microsoft. The chipmaker stock surged by 3.2% on Tuesday as well, elevating its market capitalization to an unprecedented $3.34 trillion. CNBC-TV18 Shireen Bhan caught up with Shankar Trivedi, the Senior Vice President of Enterprise Business at Nvidia, on their journey towards this triumph. Listen in.
The shock and awe story of Nvidia, Shankar. I mean, today the most valuable company in the world. For most of us, the big breakthrough moment as far as generative AI was the ChatGPT moment. But for you and for the folks at Nvidia, I mean, when did you start to think that this was on the verge of an explosion?
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and, major ISVs. It takes a long time to build a market.
All right, so that is the big interview that you definitely want to catch. The full conversation comes up only on CNBC-TV18 at 7:30 p.m. today and 9:30 p.m. again tonight. Let's move on now. The GST Council will be meeting this Saturday for the first time since the Lok Sabha election. Sources have said that the council is considering levying tax on spectrum allocation in the telecom sector, alongside discussions to reduce taxes on supplies collected at source for e-commerce companies. Timsy has more details on this. Timsy, take us through some of the key issues that perhaps would be before the council.
Well, that's right. It seems to be a full plate for the GST Council, which is likely to meet on 22nd June. Sources say that the Council is likely to clarify on issues with respect to GST levy on spectrum allotment to telecom companies. Council could say that GST levy on payment of license fees, spectrum usage charges applies on the due date or the payment date, whichever is earlier. And in case of installment payments or deferred payments, GST should be discharged accordingly. Similarly, a clarity is likely for the highway builders. Sources say that under the hybrid annuity model, a builder is liable to pay GST at the issue of invoice or payment receipt, whichever is earlier. In case there is an interest component on installments or the annuity payable by NHAI to the builder, even that will be taxable. Council is also likely to issue clarification on a plethora of issues, including taxability of reimbursement of shares as ESOPs, also providing clarity on the corporate guarantee provided by related persons. Also, clarity is awaited on wreck and salvage values in motor insurance claims. Clarity is likely to be extended on whether there is a clear decision on extended warranty provided by manufacturers to the end consumer. Several proposals of the insurance sector, such as supply between lead insurance and co-insurer, on transaction of ceding commission between insurer and reinsurer. The council is also likely to reduce the rate of TCS collected by e-commerce operators for supplies made through them from present 1% to 0.5% and a lot more. Let's see what all does the council take up when it meets on June 22nd.
Okay, it is going to be an important one, and we'll keep coming back to you, Timsy, for more updates on the outcome of the GST Council meet as well. Thank you for joining us as always with all those updates. Well, before we talk more about technicals of the markets, just a couple of stocks that came on my radar, and they are at the day's high. They've surged from those lower levels. Aarti Industries, well, the entire chemicals pack is doing well, but Aarti Industries is one of them which is doing well and is at the day's high right now. The metals pack also is making a comeback. We have Nalco, which is surging. It's up around 3%. Vedanta, we had that exclusive conversation with the management where they indicated that the demerger plan that is on track. That stock is surging up around 6.5%. Bata as well from the footwear space. That stock has made a comeback today. So that too is higher by 1.27%. So some of these names which are doing well in trade. Otherwise as well, broader markets are in focus. But let's get in Apurv Sheth from Samco Securities joining us for a quick technical check on the markets. Apurv, good morning. Thank you so much for joining us. Well, you know, it's the mid-caps which are powering through again. Nifty now is consolidating at that 23,500 mark. What are the charts suggesting? What are the next important levels to watch out for?
Thank you for inviting me on the show. Good morning. So Nifty has managed to trade consecutively for 4 days in a row at an all-time high. So this itself shows that the markets are well in control of the bulls, and although the bias is positive, but we are not seeing quick move or big sharp moves on the Nifty. So the focus is now on Bank Nifty, which has managed to cross above the 78.6% retracement of the entire fall that we had seen from 51,133, which was the top on the exit polls day high. So banks are likely to be in focus, and we would like to have a bullish call on Bank Nifty. So 50,500 is a stop loss that one can keep, and the short-term immediate term target would be 52,000, and slightly longer term target would be 54,000 on Bank Nifty.
Okay, all right. That's the Nifty Bank. Any other stock trades, Apurva?
Yeah, sure. So our first trade will be from banking space itself. So Kotak Bank is something that we like. So Kotak had a sharp fall last month in April after the RBI diktat. So from there on, it seems that the gap is likely to be filled, and Kotak Bank can touch 1850 levels pretty soon. So 1730 will be my stop loss for Kotak. And another pick is from the fertilizer space. So entire fertilizer space is buzzing, and out of that we have picked GSFC, which is a PSU stock, and the stock is currently trading below its book value around 0.76 times, and it has quite a few good holdings like GNFC, GIPCL, Gujarat Gas, etc. And the stock is also fundamentally as well as technically looking good, so it's forming a double bottom, and our targets for a medium term perspective on GSFC would be 319 with a stop loss of 230.
Okay, GSFC up 9%. The entire fertilizer pack is doing well. Thank you so much for joining us today and giving us those technical picks and the outlook as well. We'll do one thing, we'll slip into a short break. As we do that, let's hear out some important market opinion coming in from Krishna Sangvi of Mahindra Manulife and Manish Suntalia of MK Investment Managers.
Financials would have been a natural port of call considering the ownership pattern. So that's where some money gets taken out to invest somewhere else. See, let's look at macro picture of economy. I think all sectors are interlinked. So we have this concept of profit pool participation, where some sectors lead the earning growth, some sectors lag it, but net economy keeps on growing. A lot of capex announcement which would have happened earlier are possibly likely to continue. So it's going to be more of a valuation call, and that's where the thought process comes in, is that as and when some of those capex cycles which was initiated sometime back starts getting played out. See, what's the end game of capex cycle, right? End game of capex cycle is higher manufacturing, which creates income for people who are employed. So it's job creation. It's some Indian factors of production being paid out as a part of this cycle.
Overall, I think the direction remains positive. Only thing to watch out for is that for the next 6 months point of view on a fundamental valuation basis, the Nifty 50 looks to traject another 5 to 6% or 5 to 7% at this for the next 6 months. So the main action is going to be in certain sectors, the broader markets as a whole. I'm not talking about the extreme small caps or the micro caps, but yeah, the mid caps and the largest mid caps or relatively, decent market cap mid caps are the areas where the action was likely to be. I think direction remains positive. Overall, I would say that in terms of the IT space, we would reckon that the second half of this year or the first half of next year, clearly there should be some sort of pickup in the IT space in India.
Welcome back. You're with us on Trading Hour. We have Manish Dangi from Mosaic Asset Management joining us on the show right now for some perspective. Manish, always great to have you on. Pleasure. So even the market has had to digest a lot. The fact that elections are finally over, and the fact that the rate cut expectations, I guess, both in US and in India, they're getting pushed back. But equity markets don't seem to be complaining at all. So what do you make of things as they stand right now?
So equities dial, of course, is that the margins sort of stay super high, both in US and India. The profit margin in US is sort of near all-time high, at least 20-year highs, 13% or so. If you look at MSCI universe, something similar, you could say, it's like a post 2007-8. We haven't had this sort of margin. So I mean, equities dial is largely about margins. I know, as a matter of fact, everywhere the rate cuts have been pushed out, but I don't think sort of bond market watchers sort of think of terminal rates at any different level than what they were thinking even 3-6 months ago. The transition from relatively buoyant economy to rather slower in US is there, but it's sort of relatively slower than what many people anticipated.
Okay, so it's been slower than what was anticipated. Manish, good morning. I was just reading one of your write-ups. It's been a while. You wrote it around 5 months back, which said most overrated story in India is the India routine consumption story. I wanted to understand what are your thoughts on that right now, because everyone's talking about consumption coming back, be it in the rural areas, or maybe some push towards more spending and more consumption. Do you think still the long-term story remains overrated?
So I'll try and link it with political outcome. So there aren't too many obvious learnings or messages from the political outcome in India. But if there is one, and that is that, there is some distress in below median population. And if we were to amend that, and this government has been sort of pretty deft at it, I'm assuming that incremental actions would be taken to heal that part. And which is why actually, if I were to sort of take off a cyclical view, which is like next 1.5 year, I would not be surprised if the bottom of the pyramid, or I won't say bottom, the median person's consumption, would actually get a little bit of a perk up. So there are two parts to the point that I would have written. The structural story of India, that India is a great consumption story. Once you contextualize to the rest of the world, it isn't sort of any significant. It's just that the cyclical part of it, that we've had a pretty depressed consumption over the last 2 years. I think, that should begin to revive. Especially rural folks, would see sort of more sort of wallet share being spent on, or rather bigger wallet as well as more wallet share being spent on consumables, particularly staples.
Manish, so what should the portfolio strategy be going forward? And I also wanted to get your view on the way bonds are behaving in trading, because we're finally getting close to this all-important global bond index inclusion, right? India making the cut. And we've already seen that rally play out. So on bonds, is there more left to play? Or do you think the best of it is probably in the price at just under 7%? And on equities, I mean, what are the kind of returns you would expect for the rest of this year, given the fact that we are, already at all-time highs?
So there is sort of clearly a case of Achhe Din as far as bonds are concerned, and perhaps it's sort of a secularly good run. Bond market participants have had sort of a very bad 15 years, that the booms were short and persistent bearish markets sort of, which led to the situation that income funds, gilt funds, long bond guys never made big money. I guess, we are given demographics, given the fiscal orthodoxy, and now that we have an assurance of similar policies over the next 5 years from Modi government, it's likely that we would enter in longish bull market as far as bonds are concerned. So almost everything is coming alive, both on the macro side as well as demand supply. So one, of course, is this 28th of, a lot of money starting to come in. But I kind of think, that for the foreigners, India's story is actually a bond story, given that they are out there struggling for many other things, not just the transient inflation that they have right now, but, potentially high fiscal deficit and such like. I guess India offers a great opportunity, a mid-yield opportunity for a foreign investor. So I think the drought in Indian bond in terms of flows will end. You will have many, many billions of dollars sort of starting to come in India, already which has started. And I think I've made this point to you folks many times that I wouldn't be surprised in this cycle, bonds head to near 5%, and which is sort of very, very significant. And once I tie this to asset allocation, given that, as you said, equities are very pricey, you have an earning yield of just about 4.5% in India, very depressed. I don't think, people should expect any significant risk premium as far as equities are concerned. So a better place to hide incrementally, of course, is bonds, not equity in India.
And this is a time when we're talking about equity markets doing really well and bonds as well, seeing a lot of flows. The JP Morgan bond inclusion and the other aspects of the bond market as well. Manish, I wanted to understand your outlook on metals. Our colleague was just telling us that copper is off those 2-month lows. It seems like now it has bottomed out in terms of prices as well. Will we continue to see an uptick in metal prices? And is this something which is a structural story, considering that we hear a lot about capex, not only domestically, but globally as well?
Yeah, so it's less of global and more of China. I think, how dislocated the whole macro dial has become and how divergent each economy is sort of advancing. You had sort of severe Europe recession or slowdown, so to say, 1.5 years ago, and US continued to do really well. China, surprisingly, had a very, very depressed outcome post-COVID. But what is likely is that while US heads to sort of severe slowdown, if not recession, China actually is prepping itself up for a potential stimulus. And the growth is sort of reviving there, fairly decently. And that is what the metals are proxy for, I guess. I kind of think that oil will tell you a story of global growth, but more specifically incremental growth coming from US, whereas copper tells you a story of, it's an insider of China. And it's telling you that oil is relatively getting better as far as China is concerned. So, apart from the general stories like EV consumption and all the new age businesses, which consume a lot of metals, I guess that as a macro, China would potentially do much better. And that means that, you'll have two divergent trends, at least until it's very evident that US is in deep recession, that metals would do better versus oil.
Okay, so money is to be made in the bond market, maybe not the equity market for the rest of this year. I'm going to remember that one. Let's see how it plays out. Great perspective as always. Thank you very much for joining in, Manish. You have a good rest of the day. Well, with that, we'll take another quick break, come back on the other side, and we'll get you more on the markets. After the US government filed a lawsuit against Adobe, the company's chairman and CEO, Shantanu Narayan, spoke exclusively with CNBC-TV18. He termed the US government's case as misguided and promised to fight it in court. Speaking to Shireen at the Adobe headquarters, Narayan said that the world had entered the era of artificial intelligence and acknowledged that it will be disruptive, while also adding that AI can be a massive enabler as well as a tailwind.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts. And the reality is that it was the government's case is misguided. And so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. Yeah. We have open and flexible policies where some people can pay for it up front and get a discount and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
Okay, that is an interesting conversation, and we'll keep getting you more updates and more slices of that conversation as well. By the way, before we wrap, let's quickly take a look at the markets. Nifty has actually inched higher, 44 points higher on the Nifty, and it is at the day's high as well. We have the mid-caps, which continue to do well, 0.7% higher. Bank Nifty too is participating today, so we are seeing gains of 0.6%. So 2 continuous days of good show from the Bank Nifty as well, and I think I would say 3 days continuously. And a lot of stocks in the broader markets, something like an India Boost Real Estate, that stock has surged. It's up 17% in trade right now, and it has been declining in last couple of trading sessions, but today, just look at that. It's a one-way move and a sharp surge in just last couple of minutes itself. Also, watch out for some of these PSUs, BPCL and IOCL. These 2 names are doing well, and a lot of action in the OMCs as well. So both of them up anywhere between 1.5% to 2%. With that, we'll take your leave on this edition of Trading Hour, but stay tuned. Halftime report comes up next.